And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and happy Friday, everyone. Welcome to the Market Forecast. Friday, October the 8th. It's a very special day. I'll tell you why in a little bit. As always, thanks for trusting me with your time. I'm John Hoagland. We're going to be looking at these markets in context. Always looking for good risk management and using infinite patience. As I'm sure we're all aware, the unemployment numbers came out this morning. Non-farm payrolls was expected to add 500,000 jobs, only adding 194,000. Unemployment rate was expected to be at 5.1%, down 0.1%. They've got it marked at 4.8%. Now, manufacturing payrolls were okay. Private non-farm payrolls were also a miss. They were looking for 455,000. That only came out at 317,000. However, last month's numbers were revised higher. I don't know if it's enough to make up for what we had this morning. However, the markets really, equities knee-jerking. Anything directly related to the dollar. The dollar took a little bit of a nosedive, so we've got gold and the euro marching to the upside. Rates took a dive to the downside briefly, so we've got the 10-year with a little bit of a knee-jerk reaction to the upside. We're going to be looking at all this on the charts very shortly. So, as far as other news coming out today, 9 o'clock, we have wholesale inventories. This is a preliminary number, not expected to be all that impactful. U.S. equities were cautiously higher prior to the unemployment release. Anything short of a disaster in these unemployment numbers is pretty much going to seal the deal for the Fed being able to start reduction of bond purchases in November. Crude prices holding near 7-year highs on global shortages as those continue. And Tesla has, Elon Musk stated yesterday after a shareholder meeting that they are moving their headquarters out of California and to Austin, Texas. So a little bit of a trend going on there. As always, make sure you like, share, comment, question, feedback, and heckle at will. Subscribe to the YouTube channel so you can get notifications when we do go live. A quick look at the VIX just before the open here. The VIX is down a little bit, 1941, back down below 20. Dollar index, 93.98, knee-jerking to the downside, of course. And the 10-year yield, get a little pop here. In yields after a drop, but last I looked, it was 1.58%. It's moving around a little bit this morning. As always, got to say good morning to everyone. I saw the infamous Felix Escobar first in the room. You win the prize today, Felix. Brian, Theo, George, Federico, Drew, Charles, Daniel, Harry. Good morning. Impact of disappointing jobs report on futures today? Time will tell. There's so often when we have a number that comes out that we're expecting to go one way that doesn't. It's very difficult to anticipate how markets are going to digest that information throughout the day. Here I suggest trade what you see. Don't go looking for trades. Let the market come to you. You'll find a good opportunity today. Harry, Vince, good morning. Zerain, deep beep. So much for that Island Top and CL. Yeah, we closed that gap yesterday. Post haste, didn't we? Zerain, good morning. Jason, Dr. VJ, good morning. James, Harry, Wild West, yeah, of course. In the morning here, after a release like that. Ocean Blue, I'm glad that you find my ideas helpful. That's why I'm here. We all want to see your success. Andres, Laura, good morning. George, George James, good morning. Spencer, Ophelia, and Ricardo. Nice shirt. Oh yeah, this is my fave. I love this shirt. Gotta stay kind, not only to ourselves but to others. Piples, it's good to see you this morning. Chris, good morning. Alfredo, good morning. Day 2 in the store. I'm glad that you're here. Hopefully you are going to find some good information, some good ideas. Thinking about starting this at 7:45 on Monday. I don't know if I'm going to do that on Monday, but maybe next week we'll try a 7:45 start, see if we get more done, and maybe you'll be able to relax a little bit and take our time. All right. Just a quick notice here. Today is my brother's birthday. I was hoping he was going to be here. I was going to razz him a little bit. Mikkel, green on the numbers release. Let's stay patient. Keep it going, of course. But he is not. So let's jump into the charts. I don't see him here yet, but we may see him after I show you this. Here's a picture of me and my brother. This is about 1988, back when I still had hair. That's my brother there on the right. He's a handsome devil. Happy birthday, Rick. And off to the charts. Here is the daily in crude. All right. Kind of holding a 3-day balance here. Looking to perhaps break out the top of that here. Did we leave the opening range at a high or a low? Doesn't look like no. We've traded outside the opening range on both sides. So no opening range was going to work for us today. Back to the daily chart. Overall, open interest continues to rise against Delta. What is Delta? Well, Delta tells us who the more aggressive traders are. This is the daily Delta here. So we can see from when we were down here, we see more aggressive traders using market orders to hit bids. Delta is basically the number of contracts that trade on the offer, which is positive delta. You're a buyer, that's creating positive delta, minus what is traded on the bid, which would be negative delta. We've seen delta falling rather steadily since we started this up move here. Now that's interesting. It's also interesting that we're seeing an increase in open interest over time against that. That's telling us that there may be the presence of longer time frame traders accumulating longs, expecting prices to go higher. It's important for us to know this as day traders. That's going to probably keep me looking to buy weakness if I get the opportunity. Okay, the auction to the upside appears healthy, adding another 8,700 in open interest on this move yesterday. After a pretty deep move to the downside, we closed very well. We seem to be holding perhaps even a gap to the upside. We're going to see that here in just a second. But volume, open interest, and delta are all indicating continuation to the upside is likely. Here's the 30-minute chart. So we do have a gap. Okay, here's our move down yesterday. That was that big push. The market, basically opened with a gap, tried to push away from the gap, closed the gap relatively early from the previous day, and again closed very well. 78.30 is settlement. You may want to put that on your charts. We did have some pretty decent overnight longs, a little bit of reconciliation here before the regular trading hour open, but since about let's say 7:30, 8 o'clock, we're now open. We're pushing higher. We're one-time framing higher. I don't want to try and pick any tops in this market. I'm going to be patient and look for an opportunity when the market exhibits some sort of weakness, some sort of pullback before I start getting in to this market. Now, should this upside activity fail, we've opened outside of range and outside of value. Our overnight longs are still looking for help, and it looks like they're getting help in the regular trading hours. But if the market were to come back down and show some degree of acceptance inside value from yesterday, that may mark that the market is accepting lower value. Right now, we've got outright higher value than yesterday. But if the market returns and accepts subjective term inside value from yesterday, there's a probability that the market could pull all the way back down to value low from yesterday. Does that change our market state? No, it does not. So anytime we have an opportunity to look to buy weakness near the high of yesterday's range, I'm going to take it because it lets me limit risk. If it doesn't hold, then I can go the other direction, perhaps. Got to be careful with that because it can chop you up. Okay, so we have our rules set out for us. We've got a gap higher. If we can't close the gap relatively early, we look for opportunities to trade in the direction of the gap, which would have us looking for longs. You never know what is going to happen. It's one of the beautiful things about trading and one of the very aggravating things about trading. Here's the S&Ps. This is the 30-minute chart. Let's start with the daily. Okay, yesterday, as we know, we've been talking all week about the fact that the market has kind of fallen into a degree of balance here. Okay, let's say 1, 2, 3, 4, 5, 6 days of balance. We broke out of that balance yesterday. We would expect a breakout from balance to bring higher volume. It did not. We would also say it would be a good thing for the breakout to the upside to bring in more open interest, which it did not. We lost 500 in open interest. There was very little accumulation in this market yesterday in either direction. So low volume, no open interest increase. The market is showing basically center of the court here for the unemployment number to see if anything wacky was going to come out. The market has knee-jerked in both directions. We're going to be opening here in about 17 minutes if I can finish yammering. Here's the 30-minute chart. Yesterday, look at the difficulty it had holding the rally from yesterday. Now we had a gap. We had very little attempt to come close the gap. We moved higher, but we kind of stalled up here and had a hard time holding price up at that level. That to me is very interesting. Do we have any overnight inventory? No, not really. Settlement is 43.90. We've traded both sides of it. We've knee-jerked our way to perhaps a flat, a short time frame trader inventory. The market is going to probably open back in value. There is a potential probability for a repair day, which would take us up to point of control from yesterday and help us fill in some of this space that was left on this directional move early yesterday. But again, we're going to be opening in range and in value. I'm going to try and stay patient. The exponential moving averages are very close together, which sometimes can be an indication that there is a larger move coming. So, I'm not sure how that's going to help us today. I'm going to be looking for initial opportunities that are related to the daytime frame from yesterday. If we can't hold inside value, we've got lots of repair things to do down below. We've got this gap. We've got another naked point of control down below that. So I'm going to try and stay patient today. As always, there's a lot of conflicting news in these markets. There's still a lot of uncertainty out there. There's still a lot of arm bending going on in Washington. The market's really looking for information. Take a look at the Nasdaq now. Nasdaq is a very similar situation. Here's the daily. Okay, we've got the market center court. Again, you remember, we sometimes see these markets kind of volley back and forth between support and resistance levels. We've got a little resistance level here from last week. We've got support that has held down below here. The market kind of opening in center court, ready to move either direction on new information. 6-day imbalance, again, similar situation, low volume. We lost 1,000 in open interest in the Nasdaq yesterday. So, the fundamental information that that we see in volume and open interest on a breakout type of situation just isn't there. It wasn't a very impressive breakout. So, we can see here we've still got lower highs and lower lows. We haven't broken structure yet. Take a look at the 30-minute. So yesterday, similar situation. We have a gap. We try to close the gap. No success. We have a pretty decent upside move, but it really has a hard time holding that upside move. Settlement in the Nasdaq 14,881 and a quarter. Put that on your charts. Are we getting a little bit long here before the open and short time frame, where we've already seen the potential for the repair that we were seeing in the S&Ps playing out here in the Nasdaq? We've traded to the point of control. We've even traded above that. Now we see the market coming back. This was all a bit of a knee jerk from the unemployment numbers. Opening in range and value gives us the opportunity to stay patient, let a range establish itself, and look for better trade locations as the day goes on. I don't see how today is going to be any different. Okay, gold, one of the markets that was more affected by the unemployment numbers because it was a pretty good move in the dollar. So we see, let's go to the daily. Let's start where we start. Okay, we had 6 days in balance. We're breaking out of that balance. We are also testing weekly kickoff high, which is 1780, 1779, 1780. We've tested above that. If we find acceptance up here, we can change our market state to a medium time frame downside to at least a short time frame balance area, bigger balance area. If we take out this trend line, we can certainly change this market from range bound, which it really in large part has been in longer time frame, from range bound to a potential move to the upside. Again, I'm going to stay patient. Some of these notes were from before the numbers came out. Waiting for extremes, but we have an extreme that we broke out here before. Well, since the numbers came out, this extreme of this balance area, balance rules say we fade the extremes of the balance area until we get some degree of acceptance. Pretty decent volume already in this market this morning, so I'm not going to fight this move to the upside. I'm going to be looking for opportunities to buy weakness in this market until said time, if the market kind of falls back into the previous area of balance, which personally I don't see that happening today. So here's 7:30. Here's when the numbers came out. We did not leave the opening range at the low, with the 720 opening range or the high. The number came out, drove us right through a naked point of control that we've been looking to go check. Now we're testing that weekly kickoff high. This is an important level up here. If we can't hold above it, we've got enough longs in this market to push back down to the downside. But if the longer time frame traders, which these weekly kickoff levels are meant to sniff out, if the longer time frame traders need to adjust to inventory to get out of shorts or add to long positions, they can push this market considerably higher. Okay, we did not have a gap, but we left yesterday's range in a haste. The euro. Right. Low volume. Yesterday, we did have an interesting increase in open interest of 1,500 contracts. Again, this market was sitting here in center court. Weekly kickoff high, weekly kickoff low, center court waiting for information. We've got our information. We saw a pretty good knee jerk to the upside. Looks like that knee jerk has kind of fallen off now. Take a look at the 30. So here we are. Settlement is down here, 15 115.66. You may want to put that on your charts. But here's the knee jerk to the upside. The dollar took a dive. Dollar must be coming back. Where's our longer term trend here? It's to the downside. Have we broken that? No. We're looking for opportunities to sell strength until further notice. Did we sell strength up here? Would have been a tough trade to take. Nothing really much to lean on besides closing this gap and then rejecting value from that day. So that's one that we've missed. Don't worry, there's going to be plenty of opportunities for us throughout the day today. For the 10-year, get to the daily. Okay, yesterday we closed below weekly kickoff low. The knee jerk took us back above it, but is showing signs of rejection. Rates have continued to creep higher. Therefore, rates, note prices, bond prices continue to break. We had a pretty decent open interest increase yesterday of 37,000 contracts. Volume was not all that great, but I'm impressed by the number of new contracts or new business that came in on this breakout down below that weekly kickoff level. Taking a look at the 30-minute chart. So here's that move. Settlement is here. You may want to put that on your charts. 131 and 12 and a half, 30 seconds. Market taking a look here at weekly kickoff low, finding resistance. That looks like a pretty decent level for a possible execution, if you'd ask me, if we get the opportunity again. For the nat gas now. Lower volume and open interest on an attempt to the downside yesterday. Lower volume, we lost 9,300 in open interest. Little bit of short covering perhaps off that deep dive to the downside that occurred early in the session. Where are we today? Well, we got some pretty low volume here. The one thing that really sticks out to me is this is like a multi-year high up here, this 640. We put it on the charts as a kind of a secondary weekly kickoff level last week when we broke out above this one. We got there. We've left a bearish engulfing pattern. Okay, the market came up. The market opens, trades higher than the previous day's bar, completely engulfs the candle body of the previous day and closes lower. It's a key reversal pattern. The bearish engulfing pattern, those of you that are familiar with candlestick patterns are well aware of it. Is that technically going to be enough to keep this market under control here in the U.S.? Only time will tell. Take a look at the 30. All right. So here's our test of weekly kickoff high in the overnight. Here's our deep dive yesterday. Here's our recovery yesterday. Okay, we lost 9,300 on this recovery move to the upside. That tells me there was probably a little bit of short covering that came into this market. We actually left a late spike. Okay, did we open inside the late spike? It looks like we opened right at the base of the late spike. Is this going to be telling us that we're accepting higher prices? It's kind of cool because value high is at the base of the late spike. If we reject value from yesterday, I'll look for this market to move higher. We have settlement, we have point of control. This is a high target area where we are right now. If we accept inside of value, there's a probability we could come back and recheck the low of value. So it's a little bit cognitive dissonancy, if you will, to be looking at opportunities for this for the nat gas today. There will be opportunities. Try and stay patient. If you miss something, don't chase. There will be another opportunity. I find that if I'm looking for trades, I'm always going to find one, and it's probably not going to be the one that I've been waiting for. So, all right, it is Friday. We've got plenty of time to get prepared for the equity open. This week, again, my apologies for not being here on Wednesday for the group coaching. We're going to do the group coaching on Wednesday. We're going to be adding times for group coaching. We're going to start doing it on Mondays and Wednesdays. Probably next week we'll do 2 sessions of group coaching, and hopefully, many of you will join me, and hopefully I can help. Nobody knows everything, of course. I know I certainly don't, and I'm readily available to say, no, I don't know about that, but there's going to be a lot we can learn together. Trade well today. Get out there and profit. Be good to yourself this weekend. Be kind to yourself. Be kind to others. Do something nice for yourself as well as somebody else this weekend. Get some rest. Get some exercise. Have some fun. Be ready for Monday. Well, we're not even through Friday yet. We're already talking about Monday, but it's that bittersweet thing that we get some time off, but we're going to be thinking about the markets anyway. Okay, so get out there, profit today. Have a great weekend. Thank you, Fred. Good morning, everyone, again. And I will see you Monday morning. Have a great weekend. Oh, I'll see you in the pit in a few minutes.